Good morning, everyone. It is Thursday, June 3rd, and this is Nadex Morning Analysis. My name is Todd Rich. I'm with Nadex. Joining me, as always, from Keep Trading Simple is Brian Caprice. We are going to look at hot spots in the markets today, potential hot spots that you want to look at, and we have a lot to talk about. So let's get into it quickly because there's a lot going on this morning. Before we jump into it, I do need to share this disclaimer that trading involves risk and may not be appropriate for everyone, that any trading decisions you make are solely your responsibility and at your own risk. And this is an educational session. Please do not construe anything Brian or I say as a buy or sell recommendation. We are doing this for your educational purposes. So, what do we have to talk about today? Number one, there were a bunch of economic numbers that came out this morning around around employment changes, and we can see employment is spiking higher, which is great for jobs, but that's having a different impact on how hot the economy is running. We also had our jobless claims numbers. Now, a reminder, by the way, we are going to have inventory reports later this morning, and we are going to talk about oil because we had the report yesterday, but then we've got at 11 a.m. Eastern, we've got that report. So we're going to talk about oil. We're going to talk about the economy and how it's impacting the indexes, all opening lower this morning. The strongest NASDAQ opening much lower, looking at it. And it's had an immediate impact on the dollar. We're going to look at dollar strength across the board and how traders, there's opportunities for reversals in there. So Brian, I don't want to hold it up anymore. I know we want to keep moving along. I'm going to go ahead and flip it over to you, and we can talk about oil, the economy and the numbers, the NASDAQ and the dollar.
Yeah, so obviously we mentioned earlier this week that there was going to be big news today. Again, this is not non-farm payroll, but this is the first number out, ADP's number. And this is an absolute huge miss. The forecast coming in at 645 and coming in at 978,000 is an absolutely huge miss. No surprise there whatsoever that it is green. Unemployment claims also came in much lower than expected. I say much lower, but 15,000 jobs doesn't seem like a lot, but on a percentage-wise, it is a decent miss. Yesterday, we mentioned two things, that if these numbers came in exponentially higher than what is expected, it's very hard to deny that there's, going to be transient inflation and that the economy is still really fragile, right? It's really, really fragile. These are huge numbers, and it's very, very difficult to really kind of say that those things don't exist. And again, the markets have really reacted, but it's the most interesting thing about this is a lot of the movement started in the European session, driving it towards levels that we've talked about this week in preparation for this number, and the numbers just happened to justify what the movement was, okay? We're going to have ISM manufacturing at 10, and again, that's another big impact news. And again, this is PMI, the Purchasing Managers Index. This is also one of those things that shows inflation. So we're seeing huge amounts of people being hired. We're seeing unemployment claims go down. If we see huge inflation over here in the ISM services, which was always the one that was a little bit more injured, that's a big deal. And then on top of everything else, at 11 o'clock today, we have crude oil. And actually, are we starting with crude, or do you want to start with the dollar first?
Let's start with crude only because we could take a look at what happened yesterday with the API stocks, and then we've got the EIA one today.
Yeah, so this is why I think with everything else going on this morning, crude I think is going to be an interesting play. A lot of times we don't see a lot of overnight movement when it is on a different day, particularly when we have a lot of news today. But here's the API number. Remember, API is the trade association based number, so the accuracy is sometimes questioned as far as what it is, but it, occasionally it does give us a good indication of what the actual EIA number is going to be today. The forecast, if you see right here in the middle, was minus 2.1 million, which is actually higher than the EIA number is. That expectation is supposed to be minus 1 million barrels. So we're already high there, but the actual came in at minus 5.3. So over double the amount there. That's a big difference. When you see that big of an expectation, you expect a lot of movement, and this is what we saw in the overnight. Not much, right? Here was the EIA number that was coming out right around in this area. We jumped at about 40 cents. Again, but what did it do? It went up, and it didn't really hit much. And again, that should have been great for oil that there was that much of a miss. And then today, what did we see since that time at about midnight? And then again, European session open here. we watch price drop back down and kind of into a level of basing. So yesterday, if you remember, we were talking about if we could get up to either of these two price areas, the 69.70 at the European Open or for news, we were looking for some type of a short opportunity. Now we see it pushing back down again, and you have to wonder, was the price artificially driven lower in preparation for a large oil miss? Okay. Again, we saw it with the the API number. The EIA, again, if it doesn't get completely foreshadowed by the job numbers, again, it's another one of those things. And here's this. This many people are getting hired back, right? 300,000 more. That drives demand for gasoline. Okay, that's one of those signs. It's like, oh my God, everybody's getting hired back. Yes, some of them will work from home. That's a biggie. Then all of a sudden you combine that with this number here that was, over twice the down draw. It's kind of setting up for a position here. And again, we're already starting to see it rally back, as the U.S. trader comes online. But could this be, one of those things that we look at right before the news release and see if we are pulling back down? Remember, if we see a pull down before news, it's typically a telltale sign that they're trying to get it for a better price before launching it higher today. So again, I would say that this is probably, we've talked about this before, the big littles. Considering the number we had, I would say that this is considered probably more on the little side, meaning with an oil inventory report, as long as the jobs number just doesn't completely just shatter everybody's money today, this has the opportunity for some big movement. So I think, again, keep that 69.60 on your radar on a smaller type level here. And again, we may not be able to rally all the way back up. The jobs number, the oil number doesn't come out till 11 today. It's not 10:30. So we do have a little bit more time. We got just over 2 hours. But we may want to kind of look at a number up in here if need be, right? If it does nothing but rally up right now in that expectation, then again, it could potentially roll. But I would say right now, I would look at this as a potential level here. As again, if we're up there at news, that may give us the ability to drop lower. But on the downside, I think you need to look at this little level here, or even maybe this level here. But I don't think it's going to drop that far in that time. I think those are some of the levels. This orange, remember, the orange is the U.S. session. As far as where we could be. So again, find it on your chart so your data, your number is exact. Again, sometimes there's a little bit of arbitrage between, trading view and what you see, but just based off candle formation. But I think today, with everything we've seen, if that comes in as a huge miss,
because the oil's spiking higher, right?
Yeah, U.S. traders coming online, they're absorbing those numbers. Again, it's not just the API numbers, but it's also this unemployment number. Again, there's a lot of people. This is a lot of
Right. So that's ultimately is what people are going to have to weigh. I did want to drop this up on the Nadex charts quickly with Crude. I haven't changed this since earlier in the week, but you can clearly see we are still. Oil has been in this. That's probably a little closer. Has been in this uptrend, and we do have that number 11 a.m. this morning. Be paying attention. There could be some opportunity in oil this morning. We'll see what those, and when it says oil stocks, that's the inventory, how much they're holding in stock. And if it's a supply and demand driven product, right? So if we keep on depleting our stocks, if there's less and less available, so supply starts going down, and we know demand is also going up, it does have that upward pressure on the price of oil, where people want it, people are going to need it if the economy's heating up and people are going back to work, and it's going to be more difficult to get if our inventory levels continue to deplete. So pay attention to oil. Now let's talk about the equity indices, and I think Nasdaq might be the best one, but we've got these numbers. Everything's getting clipped pretty severely, and looks like we're actually, and what we're looking for is reversal levels, and we're starting to catch one right now, as you can actually see.
Yeah, yesterday we talked about a break of 13,601, and I really like that level. And again, we didn't have a really great kind of level here to kind of set any type of risk level from, but we mentioned as soon as we break that 13,601, look at this thing to come all the way down to 13,511. If you don't believe me, go watch yesterday's video, because I know we talked about this one. And it did. It came all the way down here, and magically it just happened to hit the 13,511 right when news came out. Imagine that, right? And again, this is what we like to see. And again, is it positive news? Yeah, absolutely it is. Seeing less people, filing first unemployment claims, and seeing such a huge amount of people getting hired back again, that is overall good for the indices. It's bad for the indices in the fact that if the economy is running that great, they have to talk about interest rates. But again, they've had complete blinders on right now. If there's no mention of that today, again, that should lead all the indices higher today. The reason why they're all down is, again, think about it. If you want to buy something, what do you want to do? Do you want to buy it when it's really, really expensive, or do you want to buy it when it's cheap? And this just shows you how the market overall moves, right? If we go down and you guys look at the 3 o'clock open, which is right here. Ooh, let me roll around. Not that one. I always do that. There's the European trader. And what did the European trader do? Drove this thing straight down into a great buying opportunity. Maybe with the assumption, maybe they knew, who knows? It doesn't matter. But we knew that it had a level down south. And again, had you placed this trade in the overnight looking for a break of the 13,601, you got it all the way down. In fact, it came all the way down to, didn't quite go 100, but it went about, 90 points, right? In a matter of an hour and a half. And now we're seeing the reversal of it. And again, it makes complete sense. It's driving into a level that we've seen. Again, I'll bring this across. You can see that it has touched there. And this is just happens to be around news time. So remember, my favorite times to trade are the session opens and news. Again, this is news / the actual open, the market's there, but we know that we had a major news release, something as big as API numbers and unemployment right there at 8 o'clock. Coming into a 30-minute level at news time, there's your trigger, right?
Yeah.
There's your trigger. And again, had you guys gotten into that position, you could have used a short duration binary contract, and we've already moved 48 points. Actually, no more than that. Oh, yeah, 48 points in less than 30 minutes. So again, you can get in there for those kind of quick trades of things. And again, a lot of people will say, oh, here's where I would say that Nadex has the advantage. Could that have number been the exact opposite and been red and sent us even lower through the zone? It could have, right? Yep. Using Nadex short duration, binaries or even call spreads in this area, right? What's the worst that could happen, right? If it goes straight down, you lose the cost at the end of your transaction, including the free. If you were in futures, if this thing gapped down here because the number was a huge number in the opposite direction,
unlimited risk, yeah,
you got a lot of problems, right? So again, that is why I absolutely love news trading. It's why I cover news every single day. It's why we cover news on the weekly presentation, because you don't need to spend that much time sitting in front of a computer. Knowing that we're sitting in a zone of buyers, every one of these little steps increases your odds in a trade. Is it guaranteed? Absolutely not. But because you have that limited risk, when price does something like this, even if there was no news today and we saw price movement go from here all the way down in one session, what's the first thing you should be thinking? Reversal.
Yep. I
this
beat you
big
to
of a
it.
move into a zone, you're thinking parabolic retracement anyway. Couple that with news releases. Again, that's how you take advantage of these. And again, you could be out for the day at this point. You could be done. So,
yeah,
a lot you can do with it.
Before we go to the dollar, I wanted to ask you, because this is something just kind of crossed my mind. We've got these numbers coming in. The employment change. They were forecasting an increase of 650,000. We got close to 1 million. Things are definitely heating up. I was just looking ahead for later in the day, and we do have a few of the few folks from the Fed speaking later this afternoon. Do their comments change? Do you think that they, or does someone give them a question and ask them? Is there, when they say stuff, markets move. Is there that possibility this afternoon that they get pressed for something, and when one of them is making comments and they say something about the economy heating up? Yeah,
they're just doing so. They're basically, one of them is opening remarks, so there'll be no questions involved there. Quarles is speaking at a regulation security. Yeah, it's just banking policy. It says audience questions expected. So maybe, although Quarles is not necessarily the biggest mover of the two, they're both considered minor speakers. I would say that Harkin is probably one of the bigger ones, but these two are not one of the major players in it. So their remarks, they've already seen this data. They have it early. I would say that it probably doesn't change too much. And there may be some questions. A lot of it, I would say there'd probably be more questions about the services right now, because that's the actual inflation number, and that's what they've said. The rest of it, for an opening, for a conference, they're not going to say much. And again, talking about, financial regulation, not really kind of an economy-based speech. So it's not, I wouldn't say that is the risk today.
Okay. Well, let's quickly, before we wrap it up, the dollar strength across the board. Let's just take a quick peek at what's going on with the dollar.
Yeah, I mean, here's the dollar index. It's not something we trade, but it's something we watch out for. And again, it's an area where there's some sellers, and basically it's the same thing. It popped. The reason why the dollar index popped on the state is because it's just absolutely too good to not talk about rising interest rates. As interest rates rise, the country's currency goes up as well. That's what we're seeing, but there will be a retracement. And again, the dollar carries over in all the currency pairs. Everything that has the dollar in it right now is dropping down. Gold is kind of the proxy, and we've seen gold do the same thing, right? Dollar goes up, gold goes down. It goes back and forth. Well, we had this kind of push really, here's the dollar index. It went straight up. Here's gold. It went straight down. But what did it run into? It ran into an area of buyers that we've seen previously in the past at 1882. So, as the dollar index is starting to see a little bit of red and having some issues, again, US Trader comes online. This will fluctuate a little bit. Gold is doing the exact opposite. And again, great numbers. It's like, where's the inflation? Anybody mentions inflation today, this will start to kind of turn and go up as well. And again, gold is following the indices, and you're seeing the indices do kind of the same thing. So, indices up is kind of you're not going to do anything? All right, let's go. And gold is kind of the same scenario. It's like there's inflation here. Are we going to let it run hot? Are we not going to let it run hot? And again, 9 o'clock is always a weird time because the positions are getting placed for the open. So,
I did want to just kind of point out, I mean, it's just what we're seeing in the indices where when we're looking for reversals. Here we got the US dollar, Canadian dollar. You can see the US dollar spiking up all through this last session, the evening session. And if we played around with these charts, I mean, there's probably a level in here where sellers will come in fact, probably right around here. So really what we're looking for is reversals across the board once traders get in. So something to be looking at. Brian, do you have anything else that you got for us this morning?
No, not much. Like I said, I think oil is going to be the way to play it right now. Be cautious with where the price action has already happened, but again, not necessarily surprised. And remember, tomorrow morning, first thing, 8:30 in the morning is when we have the true non-farm employment change numbers, as well as the unemployment rate, which will be a big one. It's supposed to drop by 2%.
Yeah, that's going to be
that's at 8:30. So yeah, we won't be able to talk before then.
So right, big number tomorrow morning that you want to be paying attention to that goes on right before Brian and I start. That's the May jobs numbers, and traders are definitely keeping an eye on that. With that, any questions for Nadex, please email us, customerservice@nadex.com. Any questions for Brian, you can hit him up. Email Brian at support@keeptradingsimple.com. With that, I mean, we did cover a lot today. Just a quick recap. Oil inventory reports, oil been in an uptrend, 11 a.m. Eastern, keep an eye on that. We've seen the economic numbers come out. The U.S. economy is on fire. Jobs, people are getting jobs again. People are coming back to work. It's going to drive demand for oil, but that also is going to put the pressure to the Fed at some point to potentially do something with interest rates. We're seeing the equity indices all opening lower at the moment, looking for reversal levels, and we're seeing the dollar strength spiking higher, dollar strength, going lower if it's in the second pair. Again, looking for reversals there. With that, I want to thank everyone for joining us this morning, and we will catch you again tomorrow morning. Good luck in the